Let's go live now to Peter Switzer. He is the founder of the Switzer Report and joins us live this morning. Peter, good to see you. It was a pretty wild ride on the share market yesterday, but this was all kind of, paper money. That'll be all made back today, won't it?
It won't come back today, Laura. And look, I think there's going to be a bit of deliberation about whether they, market players should be confident that this is an aberration, or is this the start of something bad? In many ways, it's like if you're an investor, you've got to ask that Dirty Harry question: do I feel lucky at the moment?
So, is the share market the way to go at the moment? I mean, there's always so much concern when it comes to the share market in a climate such as the one that we've got. But what do you think of that?
Well, Warren Buffett has actually advised that when everyone's fearful, you should be greedy.
Yeah.
Look, and I think what the big issue is here, the optimism we saw come in overnight, to put it in a nutshell, they're worried about the fact that the manufacturing number we got earlier this week in the US went below 50. And when it goes below 50, it means that the sector is actually contracting. And that's the worst number in 10 years. So that was the first worry. Then they got the services number, how the services sector is going. It fell, but it's still above 50. So services are still expanding, but at a slower rate. And now you've got the issue around, and so, of course, on Wall Street said, economy might be slowing, it could be a recession, but this means the Fed will cut interest rates later this month. And there's like a 93% belief that they will do that, and they probably will. But, guys, I think that how you're going to invest rests on your belief whether Donald Trump will see these threats of recession, a spook stock market, and he will say for the October 10 meetings, let's get a deal. Because if they get a deal, all this pessimism that is linked to recession and is driving stock prices down, it will turn around on a dime, and we'll see the stock market rise, we'll see confidence kick up, and that will be the real turning point for stocks. But I can tell you this, I looked at the chart only a couple of days ago. If you look at the US S&P 500 index, it has actually gone nowhere since May, and that's when Donald Trump sort of talked about escalating the tariffs.
Yeah, well, the trade tension is going to persist if what he says most recently is then go by, he's not going to do a deal before the 2020 election. But back home, the RBA cut rates this week. Do you think that was the right thing to do?
Yep, definitely. And the reason is, I don't want them to cut, but until we get some solid news on the trade deal, they, in a sense, they were anticipating bad numbers in the US, and they, in a sense, anticipated what the stock market would do and the implications for confidence. Now, the Aussie economy is gradually and just creeping into the positive. You've seen improvement in house prices, business confidence, consumer confidence. It's sneaked up, just getting a little bit better. Retail sale numbers were better than expected. All these sort of things have been just improving, but there's a black cloud hanging over the whole economy, and that is what will happen if there's no trade deal. Will Wall Street sell off big time, which I think it will, and then that would lead to a confidence problem, and those fears of recession would become very real. And I think Donald Trump knows this, and he'll still negotiate hard, but I'll be very negative with you guys on this segment if we don't see a trade deal sometime in October or early November.
Peter, there was an interesting article, and I don't know if you caught it, on last weekend's Australian, where there was a commentary that came from one of the state's leaders in the US saying that it's actually a fallacy that we've had 27 straight years of growth, that we've actually had 3 recessions. Is that something that you buy into?
No, definitely not. And people who peddle this are, I think, propagators of crap, absolute economic crap. See, what they're arguing is if you take our GDP growth and divide it by the population, that gives you your GDP per capita. Now, sure, if you want to change the definition of what a recession is, yeah, we had a recession. But the historical definition of a recession is what's happened to GDP, 2 negative quarters. And we haven't had them. So you can't just go changing the definition and say, no, they've had a recession.
That's right. But, Peter, where did this come from? Because I feel like this idea of a per capita recession has only come up in the last 12 months or so.
Yeah, well, look, like when I was teaching economics at University of New South Wales for 12 years, where I taught the Prime Minister, by the way, let me add, as I often do, we didn't talk about GDP per capita. It was irrelevant. And by the way, if you want to do this, you have to adjust it for your population growth. Because Australia's had one of the strongest population growths of any Western country through immigration, even the natural birth rate's pretty high. So if you want to adjust that, I reckon these people's statistics will be totally wrong.
Hey, Peter, just in case there is a trade deal sorted, which stocks would you be getting into?
That's why you should be a subscriber to the Switzer Report, Pete.
How do you know I'm not?
Well, I'll be checking when I get back to the office.
Well, we've both received your book, I should say, and the quote of all quotes of this year, that you've been rich and you've been poor, being richer is better. Is that
That's
right?
exactly.
Yeah, but can you just answer the question, Peter? Which stocks to get into? I've just got to write this down.
Okay.
This is called Inside Trading Live on Air.
I would. By the way, it's in the book. Called Join the Rich Club, available at switzerstore.com.au. But anyway, apart from that, I would buy the ETF for the Australian stock market. That's IOZ. Is probably the easiest one to remember. IOZ. I would also buy an ETF for the Chinese stock market because that is, and there's a number of those. You can look them up. They would get a rebound on the Chinese stock market as well. And believe it or not, a lot of the tech stocks would do well. Every time there's good news on the economic growth front or the outlook for the US market, the tech stocks like the FANGs, they did really well as well. But I will write a special report next week for you, Pete.
Please do.
And then I'll earmark it and you guys can talk about it on the program.
It's not just for me, it's for our magnificent viewers this morning who are not just getting their news and their business and sport news, they're also making money.
I reckon.
Thanks to you, Peter Switzer.
Pete,
I promise you I would
there's
do
something
it
to be
on
said about
Monday.
the fake meat market. What do you think of that?
Look, my worry is, and I'm a bit of an expert when it comes to all these alternative foods. The best food you can eat is natural food. These make-up foods are appealing to a group of people who think that not eating meat is really bad for you, and I just think that's absolute CRAP. I did say it once before. I'll spell
You've
it.
dropped that a couple of times in
The
this
whole
cross.
of LA.
Yeah. Good one, Peter. I know
aggressive
some of our
on
viewers,
that.
I think, are going backwards to make sure they got those stocks right. I'll be doing that later.
I promise
don't
you
worry.
a good group next week for you guys, specifically for you guys.
I look forward to that.
Okay.
All right, great stuff. Peter, thank you.